What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, today I'm going to go over my Mogul portfolio. Today was dividend day for the month, so I'm going to let you know how each one of the properties that I bought on here has done. Give you a little bit of insight into that. I'm also going to share one of our members of the Discord shared one of PadSplit's articles about 10 mistakes to avoid. A couple of them are things that I've talked about a lot of times when doing the video, so I just want to show you that real quick. Just to sort of so you know that I'm not just making stuff up here as far as like certain things that I've heard from PadSplit that we should do when picking properties from them. Before we get into that though, check this out. Got the Mogul swag today. So the hat came in the mail. Got this shirt. I love this. Oh, okay, I'm screwing that up. Mogul, a house divided. I went with black, obviously. That's the best color. And it even came in this nice little shoebox that they branded. I mean, man, did they do this right? Um, they did take the opportunity to ask you to put something on LinkedIn. I didn't actually do that, but I did post about it on X, which is where I post a lot more often, and mentioning it in this video. Anyway, I thought that's nice, right? I obviously, maybe it's not obvious. I didn't buy this stuff, right? I am a super fan, but I'm not buying their swag. They actually sent this out. I think you had to be, I don't remember if you had to be in a club at a certain time or on one of their webinars. But yeah, if you already got yours, let me know. I noticed a couple people mentioned that theirs hadn't come in yet. This just showed up today. I didn't like have tracking info or anything. I just got it. So, if you're expecting it, maybe it's coming soon. I don't know. It's pretty excited. I know it's kind of funny, right? But none of the other sites have sent me a hat or a shirt. Kind of a weird story. I feel like that's how I picked my law school. I mean, not like completely. It really probably didn't sway me that much at all. But they sent me like a free hat and a free shirt, uh, just out of the blue, and it got me thinking about like, hey, maybe that's an option. And then it turned out they offered me a huge scholarship and whatnot, so it made it that much easier to make that decision. So probably wasn't the hat or the shirt, but they weren't really. It wasn't a place that was really even that much on my radar until that it triggered the idea, and I don't know. So I feel like it's sometimes it seems silly to have, stuff like this that you send out. But I honestly believe that it has some weird impact on you. Like obviously, I've already been talking about Mogul quite a bit. At the moment, they're, definitely I'd say they're my favorite fractional real estate investing site. Um, especially if you're looking for like a traditional real estate investment, right? Like the reason I hesitate, I really like Sol Slot's business model. I just at the moment they're just not at they haven't caught up yet. They're not at the same level, but they're also not providing the same type of investment, right? So I think it's sort of an apples to oranges comparison. Although in both cases we're buying fractional real estate, right? It's sort of like flipping versus long-term holds. So I guess I could say Mogul's definitely my favorite long-term hold platform for fractional investing. And I mean, that's not even close, right? And you'll see, so I'll go through my portfolio here. I don't do this every month on Lofty because like I feel like it would just be sad. But they also don't present it in a way that it would be easy for me to just go through and do this. So you can see I have 14 properties. I actually bought a piece of the Gilmore today. So I didn't have this one when the dividends came in. A lot of times, if I can, I'll wait until dividends come in and use some of that to reinvest. And so I've had some of that. I had some of the money from the Mogul.Club, which reminds me, please like and subscribe. In the description of this video, I've got links to all the places where I currently invest in fractional real estate online. So Mogul being one of them, but I also have a link to the Mogul.Club that I'm in as well. I'm in the club, the 400. If you don't know what that's all about, um, I don't know if I did I did a separate video about Mogul clubs, but really it's just a way to, if you join one of those clubs, there's really like no commitment or anything just by joining, and then you have to invite one other person to the club. Once you start investing in there, you'll make money anytime somebody invests in there. And so, had some of that money accumulated, had some rent accumulated, and then I obviously just added a little bit of cash, picked up a little piece of the Gilmore today. I think I'll probably get more, but like I was mentioning before, I want to wait until it's closer to closing out. Although if you've been paying attention to some of the other properties, sometimes, they'll close out of nowhere, or like someone will just come in and buy a big chunk. So anyway, here's my dividends. You can see, okay, they're moving up nicely. Uh, I think in March I was only getting paid on about $5,000 worth of purchases. Now I'm probably getting paid by on about 14,000 of them, I think. Because I keep adding, but there's a lag, right? Like you don't get paid right away. It's got to close and then have some operations and then you get paid. So anyway, pretty decent return for the small amount that I have in here so far. Definitely going to just keep adding. I think at some point, hopefully when they do open up, um, have the ability to sell these, I'm hoping that we have the chance to buy some because I really wish early on I had bought bigger pieces of these. But as time goes on, I will buy bigger and bigger pieces probably. I mean, that's my goal, right? I think that still really just testing, right? Don't even have a full year of operations on any single property. But so I'm going to jump into all of them as a whole. Well, and you can see, this is kind of interesting. My average yield or my monthly yield across my whole portfolio is exactly 1%, which implies like an annualized yield of 12% for this month. Like, so if this were Lofty the way they do their yields, they would just say, oh, you got a 12% yield on this, which is not really true, right? But so they've done an annualized yield, which is a little bit less than that, right? So I like how they do it a lot better, actually. It's more realistic. It's looking at how much I've had in and over time and whatnot. So anyway, this is the axle. I'm just going to go each one real briefly, let you know how it's doing. You'll notice a trend. I'll talk about it a little bit at the end. But so this is the Axelrod. This is a duplex in Houston that is being used as a short-term rental. It's operating as one entire short-term rental listing. I don't think you can do the two units separately. This is one. This is the first one I bought, and really looked like a fantastic deal at the time to me. I think I still am happy with this deal. One, it's one of the ones that has the biggest discount to what I think the value is. But the other thing is, it's a short-term rental, so it's going to fluctuate. But so, let's see. All that being said, the monthly yield right now is 0.74%. This was for this month. Annualized 8.82, so pretty happy with that. Let's see, the roads. This is one I wasn't even that excited about it at first. This was before I realized that they do address all the stuff that comes up with the inspections because they're not really clear about that, right? They were sharing the inspection, but they didn't say we fixed XYZ. Now I know what their policies are on that. That anything that says it should be repaired, they'll repair it, or have the seller repair it or get a credit or something to handle it. Um, but so this is one that I really wish I had bought more of because it's been doing well the whole time I've had it. But so 0.96%. So my cash on cash return on this 12% annualized so far, right? The annualized is 12%. The WAGs, this is another short-term rental. I think this is one of the worst ones in my portfolio at the moment. And that being said, if you annualize this month, it's still over 6%. I don't know what's going on here. It's because they had a couple months of expenses with no income. So yes, I mean this is true because they're starting from here, right? But I think this sort of it doesn't really represent what our annual, what we'll end up yielding over the long run, right? I think we're going to do significantly better than this because this is, it's annualizing this income, but all of this expense. What do they have in here? Projected kicked off in May, first dividends for July. Yep. And what did we say here? Finished furnishing. Okay, so they give us these little notes. I think I probably looked at those. The Mafi. This is a one of the pad split properties in Decatur, Georgia. Um, this is one that's done really well for me every month since I've had it. You can see annualized yield currently over 13%. I mean, this is just like, it's really fantastic. I don't know. Super excited about this platform, obviously. It is new, do your own due diligence, both on the platforms and on the properties that I talk about, right? Because just because I'm happy with it doesn't mean it's going to work out in the long run. I also don't know when I started doing my little thing about, click on these and I think I got distracted, right? There's also a link in the description to this video to the Discord that I have set up. There's a lot of good discussions that happen about Mogul on there, about Lofty, a little bit about Arrived, about Ground Floor, about Sol's Lot. So feel free to jump in there. Join that conversation. And if you're on other platforms too that are fractional real estate, we would love to hear about it because we're always looking for other options. But yeah, so this one, doing extremely well. The Johnson, this is a short-term rental in Houston. Um, it is, it's kind of struggling, right? Well, I mean, it's not struggling. It's so funny to say that. Relative to some of the other ones, it's not doing as well, right? It's 5.5%. And so, like, what is that? Like, if you annualize just this month, what's our cash on cash? 5.5 times 12. Nope. Yeah, 6.6% is what it would be. Um, oh yeah, because I didn't do the extra decimals. Yeah, but it'd be 6.6%, right? Cash on cash. If you annualize this month, which is, our worst month so far, right? So overall, it's actually we're at 8.98%. One of the things, well, I'm going to get into this in a minute. The Celeste, this is a Houston area, or in Houston short-term rental. This is the one I think that did the worst in my portfolio. Um, Monthly yield very low. And they gave us a memo to let us know what happened. It had a slower month. There were two canceled reservations and then some weeknight bookings that have lower rates. That's rough, right? I mean, that's a very low yield. It's a little bit scary. It had started off pretty strong. So that did bring our average down quite a bit. It is one of the risks with short-term rentals, right? Usually, you just have if you do have cancellations, it's really hard to backfill those at the last minute, and there's not a lot that you can do about it. Um, but let's see, let's move on. The Victor, this is another pad split. This is in Atlanta, Georgia. Let's see, is this one? Yeah, this is another one that's doing really well for me. You can see, I'm sure you're starting to see a trend, right? The Andres, this is another pad split. This one's in Decatur, Georgia. I actually think this one might buck the trend a little bit. Yeah, we had a rough month this month, right? And what's happened? Had a move out in July, with the room released in August, and so obviously, uh, so hopefully that means this next month is going to be better. But so we had some vacancy, right? And then what's happened here? The room was signed up for a premium at the beginning of June, which bolsters the rent. That's why we were higher than normal here, right? Um, but I really love this, right? You get the details, and then if there's something that jumps out at you, you can read a little note about it. And I mean, again, these guys are just super accessible. If I have questions beyond that, I've never had them just not answer something, and they're usually really quick to respond. And the one time somebody took a little bit longer to respond, I think it was like slightly over 24 hours. Uh, they apologized profusely for taking so long, which was like, I thought that was really good. The Chelsea, again, another pad split. This one is in Atlanta. Let's see, how are we doing here? This is another one. This is only the second month I'm getting a dividend on it, and it's very strong, right? So, um, yeah, 1.1. I think something is wrong with this. I don't see how that can be right. I mean, it certainly just can't be right, right? It's not 23% annual yield. So I wonder what's going on there. Something weird happened. Um, or it's giving us, is that what is happening? I think this is what's happening. So it's adding these two together, and then it's saying, okay, because for some reason this started back here with zero. No, no, that wouldn't work either. I really don't know what they're doing. Something went wrong there. Year to date payout. Hmm. Super interesting. Seems like something's broken there. I'm not sure. I'll have to ask them about that. One of these I think actually did have something that looked like that last time. I wonder if it's the same one. I don't remember. The Ratliff. This is another. It's Douglasville, Georgia pad split. Another one of these. And this is the first month that I'm getting paid on this one. So this number is inflated because you can see there's no debt service here, right? We haven't paid the debt service this month, but we're getting the income. And so do not expect this to stay the way it has been. Um, why is that lower? I wonder. I'm gonna have to check with them because it seems like maybe their annual yields are struggling somehow. Maybe they're doing something weird. Because we have 1 month to annualize here. This shouldn't be. I don't know. They must be doing something more than what I'm understanding with this calculation. One of the other times when they did this, and I really dug into the math, I figured out what was happening. But this one, that I mean, that just looks way too off. Unless they're, I don't know. I don't know what they're doing there. Um, I'm still happy with the number that I got. I just don't know. I mean, obviously this yield is just calculating a little funny. Let's see. The Ven in Little Burn, Georgia, but another pad split. I don't know how you really say that place. Again, this one looks amazing, but it's because there's no debt service. This should go down. Yeah, this seems like a more reasonable annualized number of 1.49. So I don't know what's going on with the other one. And then you can see I own three that are not paying out yet because these are my three most recent purchases. One should start paying off next month. The other two the following month. So what was the trend, right? You could tell so far my pad splits are outperforming my short-term rentals by a decent amount. Um, Part of that is the short-term rentals are going to be seasonal, right? So there will be some months where the short-term rentals will do better. I also believe that short-term rentals in a lot of markets are struggling right now. I've talked to a lot of real estate investors, obviously, and many of them have mentioned um, that they're. I mean, struggling is maybe not the right word. They're just not doing as well as they had been, right? And so I think there's some potential that we will have a harder time with some of the short-term rentals. I am still buying some of those, even though I think, going into a recession, if we do, that they will have a hard time. Um, I also think that the properties themselves that are the short-term rentals are, going to be provide one, there's some diversification in business model. There's some geographic diversification because we have some of those are available in markets where there aren't any of the pad splits at the moment. But also, what did I do? I made it more crooked, right? Yeah, there we go. But also, I think that for the most part, the properties themselves are both better situated in their markets, and then just the properties, the physical makeup of the properties, they're ones that are just more likely to appreciate over time. Um, they're ones that will be more appealing to a broader market when you go to sell them, both owner occupants and as an investment, and I think that the investment investor market for short-term rentals is a lot stronger too, right? You have more investors looking to buy those than pad splits, although pad splits popularity is growing quite a bit, right? And so I don't know. I will continue to buy both. I think I'll be surprised if the trend doesn't continue for a while, right? I think that I'll probably get better cash on cash returns from the pad splits at least in the near term. Um, Over time, it'll be interesting to see how the two incomes compare. I might buy, it'll depend on a lot of things, right? Like every single property I'm doing due diligence on individually, trying to decide, is this a property I want to put my money into? And so, again, I've talked about this a lot. I'm not really trying to pick winners. I'm trying to avoid losers. And I think that's why you see me get quite a few of their properties. And just because I don't pick one up, it doesn't mean it's necessarily going to be a loser. I've just identified some specific risk that to me makes it more likely, seem that it's going to be more likely that that particular property is going to have a problem. Um, it doesn't mean that I'm right, right? I mean, obviously, none of us see the future, but I think that if you can, because of the nature of real estate, where you're never going to have these crazy big winners, right? Like your returns, I mean, you can see all of them are modeled for somewhat similar returns. And so what the way to have a portfolio that outperforms is by figuring out which ones are going to be losers and get rid of those. And and you can hearing me talk about this, I'm sure I'm trying to see if my book is still sitting here. It all comes out of the most important thing by Howard Marks, right? He's just always talking about that. Like it's because this type of property is very similar to a fixed income investment, and which is what he's really known for. And with that type of investment, the real value add to a portfolio as an investor is to avoid the losers, right? It's not to try to pick ones that maybe eke out a better performance. It's to avoid the ones that are really going to crash the portfolio. So anyway, that being said, I thought I'd jump into this. So this is that article. Ike posted this in our Discord. Definitely one of our most helpful people, especially posting stuff. He always gets the mogul deals. He must just be either he checks his email more than me or he's higher up on the list because he always gets them a little bit before me, or he's already posted them typically in the Discord before I even see that I have a email about them. But yeah, always sharing interesting stuff. So I appreciate that. But this was one, just 10 critical mistakes to avoid. And I just wanted to mention, the number one, homeowners associations. Even if your property is okay now, it might not be in the future because their rules can change. If you watched my last video about the most recent Mogul property, that was my concern. And maybe they have an answer for that. Maybe there's something that they know that we don't about that property at the moment. I was thinking, oh, I'll just wait and I'll ask about it in the next webinar. That's going to be sold out before then, so it might even already be sold out before I started this video. I'm not sure. A whole bunch of it sold, in just today. Anyway, limited parking availability. You see me talk about that in these videos all the time. This is one I don't really get into that much, is like lack of curb appeal, and I think it's true, and I don't pay as much attention as I should. Um, this is one, if you think about that new construction one in Houston, uh, I don't know, to me that was just an ugly building, right? I mean, it's just like, it really looks like a barracks building or something. Maybe I think that because I didn't love the time I spent in the military. It was all right, but so maybe that it just brought back some weird memory for me. But I just did not like the style of it at all. Inside, it looked beautiful, but I think there was a reason we didn't have a good exterior pick on that one. Uh, Too small for shared living. I don't think any of the ones that we've looked at have had that issue, right? They're pretty big. There was one. I think there was one that I was like, this one seems really, really trying to squeeze a lot in the amount of square footage. Septic tanks, I don't think we've run into that at all. Older homes, we definitely have had older homes. I don't think that when we've seen inspections, or, I think that this is something that they're cognizant about, is like, is the infrastructure of the home up to date, right? Unsafe or undesirable areas. This is why we're always looking at the crime map. I want to say maybe the Prince is the only one that I passed up because I was really worried about that. But there was a couple other things going on with it, and it just sold out like instantly anyway. So, even if I don't know that I even ever got a couple of my questions answered because it sold out. So I was like, oh, well, let me not even bother asking. Unusual layouts. We haven't really seen that too much, but it's not really obvious when we are looking. There could be some in some of the properties that we bought, because we're not always getting. Do we always get a floor plan? I don't think so. I don't think we're always getting a floor plan. So that's something that maybe we should think more about. Inefficient heating and cooling. This is obviously a huge thing, and it's not something that I've focused on a lot. Sometimes I've pointed out certain things that I think would be problematic, but they mentioned having multi zones, and I think that's kind of smart. It's something that I haven't, maybe we need to start thinking about that more often. And then tiny bedrooms. I mean, that is one thing I'm looking at a lot, is like when we look at the pictures. I don't know that I've talked about this a lot when I'm going through, but like, really like to pay attention to that. Like looking at the pictures, like, is this a room someone's going to want to stay in, right? Are they going to stay in there for a long time or not? And for the most part, the properties that we have, um, I've seen them, all the pictures, they appear to have good sized bedrooms. Now, we don't necessarily have a picture of every single bedroom and every single one that we buy, but just another thing to think about. Anyway, I thought so. I thought this article was super timely because the number one thing on the list was HOAs, and that's something I just talked about. I think it is good. The more as a community we can learn about the things that we should be looking for in all these different properties, the better. Because at some point, I'm going to start putting a lot of money into this platform, as long as it can, as long as it continues to work the way I expect it to. I've been really happy with it so far. Dividend day always makes me happy, but really, all the interactions, I think it was smart that they, we got the swag the same day, because, but I think that was just a coincidence. But did I know I pointed this out, but did you see what it actually says on it? It's a house divided. I thought that was kind of, funny, because it's like, yeah, you're getting it's fractional real estate, right? You're getting a piece, so it's a house divided. Anyway, I like that a lot. Uh, I think that's it, right? I just wanted to share how it's doing. All that being said, please remember, like, I'm gonna still show you. There's still plenty of these that I pass up, right? It doesn't mean Like, okay, this one says, oh, well, yeah, because I have this is pending. I invested in this, but it's still pending. But like you can say, okay, I didn't buy that one. I didn't buy either of those two, right? And that doesn't mean that that's the right thing. I didn't buy this one. But it means like I'm not just blindly buying every single one that they put up. I'm trying to use some of my own judgment. I'm trying to do due diligence on all of them. Um, I do kind of believe if you wanted to, you could buy a little piece of every single one and do perfectly well. Like I think their portfolio is going to do well over time. I am just trying to use a little bit of the real estate knowledge and experience that I have. And if I can identify something that makes me think maybe this one, there's a little bit more risk here, because that's all I'm trying to do. I'm trying to take risk out of the portfolio um, without trying to cost us a whole bunch on it's there's very little cost to pass up on one, right? We're missing out on a little bit more diversification each time we do it. But if there are reasons that I think that, I've identified that I really believe, like, hey, this one's a little bit riskier than average, I think there's no reason to, to not do that. Um, I'm curious what everybody thinks. How was everybody's dividend day? Were you happy with your results? Um, was there anybody that was like really disappointed with it? Put it in the comments, jump in the Discord, talk about it. I'm just super curious. So, anyway, that's it for today. Until next time, just going to keep making mistakes so that you don't have to.